Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard within the web trader. There's some features built into the order window that makes the risk management side of things quite a bit easier. So if we simulate some trades, we'll go over some ideas with the risk management as we set them up. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now from our main website, we can log into the web trader platform, which allows us to trade on both MT4 and MT5 accounts from the same location, but with some advanced features that you don't find directly from the MetaTrader platforms. Now, if we log in here in the upper right-hand corner, we'll be in the web trader platform. And now keep in mind, everything that we utilize within the web trader is also available in the AvaTrade app that also allows you to trade on both MT4 and MT5 accounts from the one location. Now, before we jump into the technical analysis concepts for today, we can talk a little bit about the fundamental news just to get an idea of maybe which way the wind might be blowing, so to speak, for some different instruments. Now, I know there was a lot of movement on crude oil with the events that happened over the past really couple of weeks with the situation between Israel and Iran and eventually the US and Iran. And then finally, the peace that has been at least temporarily in place, and the ceasefire is maybe the word or words that I'm looking for. With the ceasefire in place, that at least has a temporary peace, that crude oil has kind of started to come back down some after spiking up quite a bit. There were fears about potentially having the Strait of Hormuz, which is a waterway that borders Iran, that's pretty narrow, and a lot of the global crude oil shipments go through that waterway. And so there were some fears that that might be disrupted. It ended up not the case, thankfully, and hopefully things stay calm moving forward. I know there's some negotiations, maybe some peace talks between the US and Iran that are perhaps scheduled, and we'll keep our eye on that from a fundamental perspective on how that could affect the markets and obviously crude oil as well. So maybe we'll take a look at the crude oil chart and see what's happening. Now on the economic side, there's still talk out of the US as to whether eventually rates will be cut. It seems that those making the decisions aren't in a hurry to cut interest rates, and they haven't cut them for some time now. Obviously, the Trump administration, if you listen to their take on things, they're not so happy about that. And Trump himself is calling for rate cuts and thinks that there should be because inflation has come down so much. So that's an interesting situation to look at, but no big breaking news in that regard. Other than the last FOMC meeting, the rates were held steady again in the US. And so it's just kind of a wait and see in that regard out of the US. Today, there was some mixed data out of the US in particular, housing data, some good, some bad. Again, not really moving the markets a lot. And the fact that that's kind of the news right now with a lot of wait and see, you see that on the charts. And so as we go into the technical analysis of things, maybe you keep that in mind that there's not a lot of positive or negative sentiment right now on the markets. There's not a big, hurrah about really good news, and there's not, a high amount of fear about really bad news either. And leaning more towards positivity because of the brokered truce and the peace in the Middle East, at least for now. So we mentioned crude oil. We can take a look at it, see what's happening with crude oil. And so here's that spike up that I had mentioned. And then here's the ranging up and down, and here's the spike back down with the realization that, hey, truce, and no blockage or disruption of flow through the Strait of Hormuz. And so we've got some support and resistance levels that were drawn here. And I'm just getting rid of some of the lines so it's less clouded. And so what we can see is we've got a new resistance level up here where it spiked, came back down, then closed for the weekend here, opened at that exact price, establishing that that is resistance as it came right back down, and finding a new support right down here. Okay, and then this line is kind of a midpoint where there's some support and resistance in between, where we see resistance here, resistance, and then once it goes above there, we've got support at this level. And so 3 levels of support and resistance that we can see here. With the news that came in, certainly it came down, broke the support level, and challenged the next one. Now, the fact that there are talks to come, nothing settled, no new agreements between Iran and the US or Israel. So maybe the impetus for this to break the support level is kind of gone. The economic data is not such that there are recession fears or anything like that. So it could be that this support level is a nice support level to trust if you're looking to buy off of the support, because all of this momentum down, it broke one support level, but with all that momentum, it wasn't able to get through this price area here around 64. Okay, it pushed down right to about 64 even, and right back up from this old resistance and support from back quite a ways. And so what we look at here, if you wanted to set up a move from this technical perspective, saying this was really tested with a lot of momentum and held, that was really big news, and it held. And so in that regard, maybe you trust that support level. And so we start to say, okay, if I want to take profit at the first resistance without having to break it, because right now there's not necessarily any huge news, so if it could just wander back to this resistance level here, which was this old support, then we're looking at just before 68. So if I look at a take profit of 67.9, let's say, without having to break that resistance line up here, and my stop loss, it would have to break this support level, so below 64. So if we say 63.9, okay, then we're looking at over 17,000 profit with about 12,000 risk. And so the possible profit compared to the risk is an okay ratio. Little more profit than risk. It doesn't always have to set up that way, but that's the way the support and resistance levels set up right now. And then we can adjust the trade size to be the amount of risk that you're comfortable with. So as you adjust the trade size, then we have the same ratio between possible profit and possible loss, but now obviously lower numbers because I made a smaller trade size. So if I have an amount that I know I'm comfortable risking per trade, let's say, so if it's 500 a trade or whatever that might be, so then I adjust the trade size to be the amount of potential profit and risk I'm comfortable with. So if I go a third of a lot, that's getting me pretty close to the 500 number that I suggested. Or it could be a certain percent of your account, like 1% of my balance would be 537 approximately. So this is less than 1% risk, and maybe that's something I'm comfortable with. And there's no exact number for every trader. Maybe you like to risk more than that or less than that per trade. It's up to you. But the point is, you should know how much you're risking and understand your possible profit and possible loss to the price points that you're putting. Okay. And so we've got this set up where we've got a nice support level protecting us from the stop loss price, and we don't need to break this resistance to hit our take profit. And twice it's tested this price level, failed here, and so from a technical perspective, this looks like something that could come up and challenge the resistance level. And the fundamentals are somewhat on our side, that maybe we don't expect major price levels to break right now with the lack of big movements on the volatility index today. And so if I like the setup, then I go ahead and I make my move. Okay, so completely risk managed setup with some idea of what's happened fundamentally. At least the news is neutral with this move, if not maybe in our favor a little bit, as there's been some at least positive economic data out of some of the economic calendar announcements today, and positive news with regards to the war between Iran and Israel, and that really has buoyed the markets yesterday and into today. More strongly yesterday, but still a bit of carryover on that today. And usually when there's positivity about the economy, then there's usually positivity that maybe there'd be more energy demand as well for something like crude oil. So in any event, the fundamental news I don't think is working against us. It may be more neutral than anything, and the technical setup looks pretty nice with this support level, having been tested with a lot of momentum and holding for a day or so now. Any questions, comments on this idea with crude oil, the technical setup, the risk management, etc.? I'll pause for a moment. And if I see any questions pop up, I'll go ahead and address them. If you want to see how your open trades are doing, you can always check in this section where it says positions. And what's nice, if you look at the chart in this location, you can adjust your take profit and stop loss right from the chart. So you can left click and drag that up and down, the take profit and the stop loss line. You see your opening price listed. Obviously, I can't change that because the trade's already opened. But you've got everything here to be able to reset your risk management however you might see fit, and adjust things that, as you go along. Sometimes you'll drag your stop loss up to your entry price, as an example, once you've gotten a certain distance into profit, that sort of thing. Different ideas that people have to adjust take profit and stop loss. It's very simple to do from the chart here without having to manually type things in. Although you can if you want. You can click and go to edit the position, and you can manually adjust stop loss and take profit as well, so that it calculates your possible profit and possible loss for you again. Okay, so you have those options. Now, we can look at some other ideas. If we're looking at a pairing like the US dollar, Japanese yen, we can think about the idea that, when there's lack of fear on the markets, safe haven currencies tend to weaken a bit. And when there's data that's positive for a certain currency, sometimes currencies tend to strengthen. There's been kind of positive news out of the US and some fear around the world leading up to the past couple days, and things have kind of flipped a little bit in that the fear has dropped, and there's some recognition that maybe rate cuts aren't going to come right away out of the US, and so there might be some reason for the yen then to give back ground as the fear of the war maybe getting worse regionally in the Middle East has kind of waned. And so as that fear drops, maybe the yen would have reason to weaken as a safe haven currency. And the USD, without having rate cuts, maybe has a reason to stay a bit bullish. And so you try and look at the fundamental side to create a situation where, okay, maybe I would prefer to find a situation where the yen has pulled the US dollar down because I think maybe the US dollar has reason to rise against the yen, if that's how I feel fundamentally. And so let's pretend that's the case then, that you think there's reason for the yen to weaken with fear dropping about the war situation between Iran and Israel. And then maybe you think there's reason for the US dollar to at least be neutral or maybe strengthen because Jerome Powell just seems to be not ready to cut rates out of the US. So as we then start to analyze, first of all, we might look at the technical signal. Okay, so if we want to find USD JPY in the signals, and so there's a signal here, a live signal on USD JPY, so we can see the technical setup, and indeed it's a buy. So when you go through in your mind the rationale to say, okay, I believe fundamentally that there's reason for the yen to weaken right now, and there's reason for the USD maybe to strengthen, and you say, okay, let me check the technicals then. And now the technical signal agrees with what you were already thinking based on the fundamentals. Now I can say, all right, I trust this signal a bit more because it's in line with what I thought should be happening from a fundamental perspective. So I start to try and decide in my mind, like we opened the webinar with, what way do I think the wind is blowing, so to speak, fundamentally for a particular, in this case, currency pairing. And then I jump into my technical analysis and see if things set up for that type of trade. And so number one, Trading Central believes that the signal is a buy on USD JPY, that maybe the yen would be weakening, maybe because of less fear about war, and that the USD should be strengthening against it. Maybe also something to do with the lack of rate cuts out of the US. Okay, so whatever the case may be, we do have a technical signal for a buy here. It looks like the pivot line is down here on 145. And the way these signals work is as long as it stays above the pivot line, it's a valid signal, in this case buy signal, until it might either reach the take profit zone or break below the pivot line. If this comes down, breaches the pivot line, then that becomes a sell signal with a suggestion for further dropping towards the take profit zone down here. And as long as it doesn't break this price, we're looking at a buy signal. So we can look at this chart and draw our own lines. Now 146.6, if we draw that line, that's right about here. Okay, that's the beginning of this take profit zone here, from 146.6 to 147. Okay, so right about here's where the signal here is saying maybe you would take profit in this area. Pivot line at 145.03. That's down here. Right about there, 145.03 for the pivot line. If it breaks below this line, they're saying, then you might think about selling. Okay, so we're looking here at this charge upward in the direction of the signal before pulling back a bit. So you could view this pullback two different ways. The trend is reversed and now it looks like it's dropping and the signal didn't make it to the take profit. It tried but failed. Or you could say this is an opportunity to get in on this signal because it's a small pullback in a larger uptrend here. Okay, and the fact that you might feel the fundamentals say this could keep rising could dictate how you view that situation. But certainly it's still above the pivot line, has not breached it. And we could set up, if we wanted to make a buy on this, to see what's the risk reward ratio here. What amount of profit would we make compared to risk? If I get my stop loss below this pivot line and maybe below this little support area here, okay, this is where it had trouble dropping yesterday and today and went up. So this pullback, if it gets down below the pivot line and below this support area, perhaps you give up on the buy if you're looking at a buy move here. So 144.36 for a stop loss in this setup. The take profit, here's the take profit zone up here. And we can look at maybe a little larger candles to get a better look. And as you look at the larger candles, sometimes you can really start to see why the support and resistance levels were drawn where they are. I'm going to cheat this down a little because I see a resistance level here where it pulled back. Okay, it didn't quite get there today. And then the next resistance level that I see maybe is here, which was the top of that zone on this wick. And so if I then bring this back down 1 hour candles, then I'm looking at my take profit zone here. First resistance level I saw was here. And really you see where this reversed is where this closed before this week started. Okay, so we see here a close and then a gap at the open here. So we see a gap on the chart, and as this came up, it hit the bottom of this support, or what we'd call the top of this gap, and that acted as resistance. And from a technical perspective, that makes sense that there would be resistance at the top of this gap, and that's exactly where it pulled back. So I'm inclined to think, now that we've reached, if I adjust this price level, the bottom of that gap, that we're seeing trading off of this gap on the chart. We see once it broke into this gap, it rushed to the top. Once it got to the top of the gap, it pulled down, and now it's at the bottom of the gap, and we'll see if it will bounce back up. So we could trade this gap in the direction of the signal. Remember, the signal from Trading Central was to buy. Our original fundamental thinking was maybe a buy would make sense if we see the proper trend and entry point. And so now we've got a third reason why you might think to buy. We're in a gap here that it ranged to the top and back to the bottom. And so now with that idea, with this gap being found technically, we can start to zero in. And you see we've modified the take profit zone, the take profit spot perhaps, compared to what the signal from Trading Central showed by analyzing the chart a bit more ourselves. And so on the smaller candles, we see that it's still downtrending. And so it could make sense to go to even smaller candles. And if you're going to go with the buy signal here and trade towards the top of this gap, which is here, this is the top of that gap from earlier in the week that we just drew on the 2 hour candles. So if you're going to trade on this, you might wait to see if this uptrends back into the gap, because right now it just broke below the gap. Many times once it breaks below, it can spike back up and then refill that gap back in the opposite direction. So what you could do is have a pending order, execute when price hits. If it comes up to 145.6, it certainly has re-entered the gap by quite a bit. So if you say 145.6 or 145.65, just to be sure you're past this little resistance point, then your entry price would be right there, okay? With your take profit up at this resistance and your stop loss back down below the bottom of the gap. So you're giving up some potential profit by waiting for it to uptrend again before deciding to get into it. Okay, so it's just one concept. If you felt it was just going to go up and you want to go with that signal from Trading Central, then you take this nice low point and you buy. If you're waiting for a confirmatory reversal on these smaller candles first, then you do a pending order. And you could do both. You could do a manual buy right now for half of the exposure amount that you're comfortable with a stop loss a little further down. And you could do the rest of your move with a pending order, waiting for confirmatory move back up. In this case, I'll do the one move with the pending order, waiting for it to confirm an uptrend on the small candles before buying in. And then the take profit would be up here at 146.02. So let's go 146 even just before that resistance. So that would be 146 right here. And the stop loss then would be back down about where it is now. So 145, let's say 45. Okay, so in this setup, we're in the buy position, just double checking. Pending order, if it hits 145.65, that's here, it'll buy. Waiting for a confirmatory uptrend before getting in. Take profit up at this first resistance level up here, which we saw in the 2-hour candles is the top of this gap that we saw from earlier in the week, from last week into this week. And then we've got the ratio maybe looking the way that you're comfortable with. In this case, a little better profit than loss, but now you need to adjust the trade size to be the amount of risk and potential profit that you're comfortable with. So maybe I do something like 3.5 lots and see where that lands. So be looking at under 500 risk, so less than 1% of my account, to make over 800, 842.80. We'll go a little larger than that, 3.7 lots, risking just over 500, which is still less than 1% of my balance, to make nearly 900. Okay, so once you've got that set up the way you like it, then you're ready to go ahead and submit that order. Now, I call it an order because it's a pending order. It's not an open trade. It's listed in the orders over here. And it's sitting here waiting for that uptrend to be established on the 5-minute candles before it would open. Okay, and we can see it here on the chart. Entry price is up a little ways from where the current price is. We can go back to the 5-minute candles to get a better look. Okay, the trigger price is up here. This is the entry price. Current price down here, so it needs to come up, hit this price, then it buys, take profit up here just before the resistance. If it enters at this price, then the stop loss is listed, which is right here, back down below the bottom of this gap. Okay, so if it starts to fill the gap with momentum enough to hit here, then you're in on the trade. And if it doesn't, then the trade won't open. Okay, so a couple different ideas. Opening with a market move. This one's already moved into the money pretty nicely. If you're scalping on crude oil, you can already take your profit, put a small chunk of profit in the bank. If you think it'll keep going, then you stay with it. Okay, but a lot of times when you're going with how you feel the fundamental news is right now, and you find a good technical entry point like we did, you can take a quick scalp. And that's what short-term trading is about a lot of times, is finding what's the current fundamental news momentum right now, and do I have a good entry point? And if you do, boom, you see how quick it can move into profit, and you can close that and say, okay, thank you very much, and move on. Other trades, maybe you're being more patient with, and you're waiting for that entry point, like this one where we're waiting to see if there's a confirmatory uptrend to make us feel a little more comfortable about the movement, because as of right now, the smaller candles are showing a downtrend. So you wait for maybe a little bit of reversal, in this case, to come up and hit our trigger price before getting in. Because if you had just jumped right in on this one, for the last 10 minutes, it's been going the wrong direction. Okay, so you can see why it might make sense if it's trending against you from a technical perspective. Maybe you don't want to buy during an active downtrend, especially when I said the fundamental news is maybe neutral on this one, maybe in our favor, but not strongly. So you're waiting for the technical confirmation in this case to come up and break through and hit your trigger price, confirming maybe an uptrend. So in one case, it was already trending the right way. You made the move market, we already collected a profit, or we could have let that keep going. In the other case, it wasn't trending the right way. And so we waited with a smart move with a pending order to see if it would reverse. And so there's no risk unless it reverses. Then we enter hopefully with a trend in the right direction. Okay. All right, everybody. I think this is a good place to stop. Thank you for joining. I'll have another session tomorrow. We'll go more fully over fundamental analysis tomorrow. We'll still look at the technical some, but we'll go a little heavier on fundamental analysis in tomorrow's session, and that's at 11 a.m. UK time tomorrow. All right, everybody. Thank you for joining, and good luck with the trading the rest of the evening. Bye for now.